right, thank you everybody for joining us. We're going to go ahead and kick off this webinar, how to increase pre-qual to application conversion rates. My name is Emmy Sauls and I'm the Director of Marketing here at LenderLogix. And we have Patrick O'Brien on the call, who is our CEO and one of our co-founders. Without further ado, we're just going to jump in. If you do have any questions, please throw them in the chat. If it pertains to the group at a large scale, we'll try to answer them throughout the webinar. Otherwise, if it's something a little bit more personal to your business or process, we will follow up after the webinar to answer those questions. So Pat, you go ahead and take it away.
Thank you, Emmy. You excited to talk about pre-qual to application conversion rates today?
Absolutely. No better way to spend
it. Do you like math? Do you like math?
No. That's where you come into play.
I'm a big math person. I love math because numbers don't lie. The math, there's no hiding in the math. So welcome everybody. Thanks for joining us. We're in some interesting times, obviously, that we know in the mortgage space, and kind of a shifting landscape in terms of how we're winning business and how we're converting our borrowers. And something that we're passionate about here at LenderLogix is really taking a look at and measuring and understanding what the conversion rates look like at all parts of sort of our borrower funnel. And sort of the reasoning behind that is, in today's market, what we see happening with sort of the shrinking pool of buyers that are available to us is it's becoming much easier to thrive and survive as a loan officer by converting the borrowers that you already know, that you've already talked to, the prospects that you've already pre-qualified into borrowers, than it is to necessarily find new prospects out there. It's just a reality in the marketplace right now with where rates are and home prices sit. It's much easier to convert somebody who we've already talked to into a applicant than it is to go find a new person. So I kind of wanted to break down a little bit, just a hypothetical scenario of kind of how we look at the spectrum of conversion. What we find in talking to new clients is most people don't do a ton of measuring up the funnel, as they say, where they're measuring their leads and their leads to pre-qualifications and their pre-qualifications to applications. Most lenders start measuring at application. Every loan officer can tell you how many applications they have in year to date, how many they maybe expect to do in a given year, and then based on what their average loan size is, what their annual volume might look like, or their year-to-date volume. But what we find is perhaps a more important exercise is to measure some of those steps before application in order to kind of figure out, okay, what are the levers a loan officer can kind of pull in order to increase what their annual volume is without necessarily trying to track down 1 million more leads, because again, those are kind of hard to come by. So if we look at this example that's on the screen right here, let's hypothetically talk about a loan officer that's maybe getting about 200 leads a year. So let's think about, maybe that's 4 leads per week. I got 10 realtors, and on average, they might give me 4 leads per week. So I'm talking to 200 customers. And I may qualify 75% of those customers. So 150 of those leads I convert to a pre-qualification. Why 75%? Well, not everybody's going to qualify. There's going to be some people that don't have great credit, or perhaps don't have the income to support a mortgage. Some people just might ghost me. I might get the lead and never actually follow up enough times to actually speak to the borrower. But let's hypothetically say that I'm converting 75% of those to pre-quals. Then when I pre-qualify that customer, a certain percentage of those people are going to become loan applicants. Not all of them. So in this hypothetical situation, we're saying 40% of the 150 people that I pre-qualified, 40% of them will become applications. Why only 40%? Well, varying degrees. Some people just will never find a house. Some people might go to the competition. There's varying degrees on why, we don't convert 100% of our pre-quals to applications. What we're going to focus on in this webinar today is that particular piece of the funnel, the pre-qualification to application conversion percentage, because we feel that's a part of the funnel where technology can make a greater impact in terms of getting those borrowers to convert from pre-quals to applications. Again, what we find is most lenders aren't even measuring this. Most lenders don't know how many pre-qualifications they have out on the street now, or an expectation of what those pre-qualifications, what percentage of those might convert to a loan application. Again, going down the funnel here, applications to closing, that's our pull-through percentage. What percentage of our applications actually make it to closing? Maybe 90%, maybe 85%. Most loan officers would be able to tell you that figure, because again, they're measuring from application onward, but just not before. So if we look at this hypothetical situation, loan officer gets 200 leads, pre-qualifies 150 of those people, 60 of those borrowers end up becoming applications, 90% of those things pull through to closing, 54 closings on a given year. Let's say an average loan size of 200,000, that's $10.8 million in volume. If I'm making 100 basis points, which is probably the average according to MBA, that's $108,000 in commission for that loan officer. Now, if we look at that same funnel and we kind of tweak the conversion percentages a little bit, we end up with a different outcome. So let's say we have a loan officer equally getting that same number of leads, that 200 leads. Because again, we're in a market where the idea that we're going to, double the amount of leads that we're pulling in is probably unlikely. We're going to have to make better, just do better with the leads that we're already getting. So in that same situation, that loan officer, the 200 leads, pre-qualifies 75% of those. Now, are there things loan officers could do to increase that? Sure. There's things like, credit repair and things like that might be able to increase the number of leads to pre-qualifications. Maybe I hire a loan officer assistant to kind of chase down, more borrowers so, we can pre-qualify them. But that's not what our focus is today. Our focus is on the pre-qualification to application conversion percentage. And what you see is if I'm able to increase the percentage of pre-quals that pull through to application from, let's say, 40% to 60%, that's the difference between 90 applications and 60 applications. So pretty big difference. And those numbers are in line with what we see when we talk to clients. Again, many aren't even measuring what those percentages are. But when we kind of get in the weeds and start looking at those numbers, 40%, quite honestly, would almost be a good percentage in terms of how many of their pre-quals actually pull through to applications. And again, what we're going to focus on today is what are those strategies, maybe that, and some of the reasons why 40% versus the 60%. And again, if we keep the same pull-through percentage at 90%, that's 81 applications, $16.2 million in volume, $162,000 in LO commission versus 108. Material difference, right? Like I as a loan officer can make a lot more money, and I as a business owner of a mortgage bank can make a lot more money if I focus on and start to measure these conversion percentages versus only measuring the application, the post-application process. So let's talk about some of the reasons maybe when we're looking at this particular table, the difference between a 40% conversion rate and a 60% conversion rate. Now, I want to tell a story about the Trojan horse. So this is kind of a story most people are familiar with. Greek mythology says that the Greek army was trying to infiltrate the city of Troy for years. They were unable to do so, and they hatched this scheme to build this big, stupid, giant wooden horse that the Greek army rolled up to the gates of Troy and offered it up as a gift to the city of Troy. And the Trojans opened the gates. They rolled the big wooden horse inside the gates of the city. And during the middle of the night, Greek soldiers broke out from inside this big, giant wooden horse, unlocked the gates of the city, and let the Greek army in. And the rest is history. So the concept of the Trojan horse is one of building trust with a group of people, using something to kind of build trust with a group of people in order to kind of carry out a particular agenda and sometimes a nefarious agenda. So how does this kind of play into the mortgage space? Well, we as loan officers know, and as mortgage bankers know, that when we qualify and we talk to a prospect, that borrower and that prospect are walking away and they have some questions. We know this. We know because we get the questions, right? We get the phone calls from borrowers. Hey, how does my PMI change? What are my closing costs? Do I qualify for this versus that? What if I put 5% down instead of 10%? We know that those borrowers have those questions. And what's happened in our business is people have used the concept of the Trojan horse to develop something called Trojan horse SEO, search engine optimization. And basically what that is that is capturing the questions that we as an industry know borrowers have when they're out there looking for a house, and using that information in order to essentially prospect and advertise to those potential homeowners when they identify themselves online as being a potential a purchaser, a home purchaser. So how does that happen? Well, we know what borrowers do. We send them out the door with a pre-qualification letter. We send them out the door with a static closing cost summary, but that borrower is out looking at different houses and they have all these questions. And again, we know what those questions are because we get them all the time as lenders. So what our borrowers are out there doing is they're Googling this information, right? Like they're trying to figure out, hey, give me a mortgage calculator. How much is, how is PMI computed? Things like this. And what's happening in those situations is when a borrower lands on one of these websites, there are what's known as Facebook pixels, and other social media platforms do the same thing, that basically fire and identify that borrower with their IP address as being a potential homeowner, potential home purchaser, somebody that's looking at PMI rates, and somebody that's looking for an online mortgage calculator is likely somebody that's in the hunt and going to need a mortgage. So what's happened is there's been this entire industry that has cropped up around this Trojan horse SEO to identify these potential home purchasers online, to sort of inundate them with ads across their social media and put ridiculous interest rate options in front of them. But as we know, the number one lender in the United States is an online lender that absolutely utilizes these kinds of tactics. And what they're trying to do is they're trying to find your borrower who you've pre-qualified and sent them out the door with questions. They're trying to pick up that borrower where you left off and pull them into their ecosystem. So how do we fight against that? Because we know it's effective. Again, if you look at who the top lenders in the United States are, you can see that type of SEO is effective. And how we combat that is we have to be the source as lenders. We have to be the source of the answers that we know our borrowers are going to have. So those questions in terms of, what's my payment if I do this versus that? How much cash do I need to close if I do this versus that? How does my PMI change if I do this? If I put 10% down, I put 20% down. These questions that we know a borrower is going to have, we have to be the source for those. Because if we let our borrower go out into the world and kind of seek the answers on their own, we're sending them, basically onto a death march to our competitors who are going to, simply try to scoop them up as leads from somebody else. So our solution to that is to provide the technology to your borrower to answer the questions they're going to have in order to keep them in your ecosystem. So your borrower is not out there downloading random mortgage calculators from the App Store, which are only lead conversion machines for other lenders. That our borrowers aren't, out on random websites, trying to compute closing costs or title insurance or things like that. We need to be the source of those answers to keep that borrower in our ecosystem. So how do we do that? So I'm going to try, I'm going to run a demo for you real quick, just to kind of show you how our product QuickQual helps to solve that issue. And how that's done is from within the loan origination system, the loan officer is not going to send a traditional pre-qualification or pre-approval letter to the borrower. They're going to send a adjustable pre-qualification or pre-approval letter to the borrower that's going to let the borrower really kind of run their own scenarios. And in doing that, it's going to keep the borrower engaged in our ecosystem versus going elsewhere and kind of running those payments somewhere else. So from within the loan origination system, the loan officer is able to send this out to their borrower. So they basically click a button in their loan origination system, Encompass or whatever the case is, and the information for that pre-qualification is pulled over into our system. So think about the stuff that goes on a pre-qual: basic borrower contact information, occupancy type, and then some basic loan product information. And the difference the value that we add versus sending a traditional PDF static pre-qualification letter to your borrower is the loan officer within our system is able to design and set parameters around a very specific loan calculator that is going to be sent to this borrower. And what the borrower is going to be able to do is run scenarios within the parameters that the loan officer is setting up. So as I go through my demo here, all the information is pulled over from the LOS just the way that I had it set up. So I really don't have to do a lot as the loan officer. However, what I'm able to do is I'm able to set a cap on how high I'm willing to let this borrower flex their pity payment. Because we as loan officers know we don't qualify borrowers for dollar amounts, we qualify them for payments. So in this scenario, I'm able to set a payment cap for this particular borrower. I'm just going to say it's $2,800 here. And what I'm doing is I'm going to send this borrower this pre-qual. And what I'm saying is, as long as the payment is under $2,800 on a scenario that a borrower runs, they're going to be able to issue a pre-qualification letter on their device. They're going to be able to generate the PDF on their device. So that borrower does not have to call me as the loan officer on a night or a weekend to try and type up a pre-qualification letter for them. They're going to be able to do it on their device as long as they're meeting the criteria that I'm setting up as a loan officer. The other parameter I'm setting up here is I'm noting how much cash the borrower has available to close, because we obviously know it's not good enough just that the borrower meets the payment requirement. They have to have enough cash to make the deal work between down payment, prepaids, closing costs, that type of thing. I won't go through every single dial and switch that's available here for a loan officer. What I'll tell you is pretty much anything that a loan officer needs in order to exactly present the financing scenario the way they want to is here. And the loan officer is also even able to add multiple scenarios for the borrower. So if they want to qualify the borrower for a 30-year conventional with monthly PMI, and they want to qualify the borrower for a 30-year conventional with single premium PMI, they're able to present that to the borrower. I'm just going to do that here now as I'm live. Monthly PMI. And then what I'm also going to do is give this borrower single premium financed PMI. We'll say it's at 1.6% is the factor there. And I'm just going to name this one single premium MI. So the loan officer going through that exercise of setting the parameters around the particular loan that they're qualifying the borrower for just takes a handful of seconds. I mean, it probably, from the point in time that I'm in the loan origination system to the point in time that I send this pre-qual out to the borrower, maybe 60, 90 seconds, something like that. And then when I'm done with it, I just have to decide, who am I sending this to? So I'm going to hit this button here that says text borrower. And what it's doing is it's sending a text message to the borrower with their pre-qualification. I can also share it with an agent if I like. So I can hit this share agent button, and it's going to select Juliana here. It's also going to share the pre-qual with the agents, ask me if I have permission from the borrower to do that. So I'm going to say yes, that I do. Did I hit this text borrower? Yeah, I did. Okay. So what does our borrower see? So let's kind of level set here. I'm the loan officer. I'm in the loan origination system. My borrower wants a pre-qual. I ran all the numbers for him. I pre-qualified him for this conventional loan, up to $2,800 a month. And I gave him the option for a single premium or monthly mortgage insurance. And I just fired this thing out to the borrower. So what does our borrower see? I'm just going to log in from my phone. So bear with me real quick. Patrick's MacBook. Here we go. So our borrower got a text message here that says, click here to access your pre-qual. There's the PIN number 6651. So I'm going to click that. I'm going to enter the PIN number 6651. And instead of our borrower looking at a traditional PDF pre-qualification letter, they now have this super accurate dialed in calculator that's reflecting the scenario that the loan officer qualified them for. And again, I, as the loan officer, qualified this borrower for a 30-year conventional with monthly PMI. And if I swipe to the right there, a 30-year conventional with single premium MI. So those are the two options that our borrower has in order to look at payments from within. They can't run a VA, loan calculation. I didn't qualify them for a VA loan. So the important thing is we want to keep that borrower dialed into the loan program that we actually qualified them for, because that's what's really going to give them the super accurate information that they want in order to make a decision as to whether or not they want to buy a house. So what our borrower is able to do is scroll down to the bottom here, gives the borrower a breakdown of their monthly payment. So principal and interest plus taxes plus insurance plus PMI. And there's a little closing costs tab there, which is telling our borrower how much cash they need to close between down payment, prepaids, and closing costs. If our borrower wants a pre-qualification letter now for this $250,000 purchase price, because they meet the criteria that I set up for them, there's a button there at the bottom that says issue pre-qualification letter. So if they want a pre-qualification letter, they can click that button, issue pre-qualification letter. And now they've got a signed PDF pre-qualification letter for that dollar amount. I'm just going to zoom in here, this $250,000 purchase price. And we custom make these letters. So it's not like it's our letter that we force on a lender. A lender comes to us and they said, this is what our pre-qual letter looks like. This is the language we want in there. We make it look the exact way that they want it to look. But as every loan officer knows, this borrower is not going to be good with the first pre-qualification letter they get, right? Like they're going to be out there looking for houses. They're not going to find a house for $250,000. They're going to find a house and want to put in an offer for $272,000. And the property taxes aren't going to be $6,000. They're going to be $7,423. So what does our borrower want to know? They want to know what their payment is, right? Like they want to know a pretty exact number for what that monthly payment's going to be on that house. If they're going to put in an offer, they need to be comfortable with what that payment is. So by them updating those figures, they now have an updated monthly payment, $2,127. They can hit that closing cost tab there. Now they need $23,000 to close. So the down payment's been updated. The prepaids have been updated for the new property tax figure. The closing costs have been updated. So any transfer tax, title insurance, anything of that nature, all that's been updated automatically. So the loan officer didn't have to go rerun an updated closing cost scenario or anything like that. It was all done automatically. And again, our borrower still qualifies because when we set them up for a payment up to $2,800. So our payment of $2,100 here, our borrower still qualifies. So if our borrower now wants a letter for the $272,000, they can click that button, issue pre-qualification letter. And now they're generating an updated pre-qualification letter for $272,000 instead of the original $250,000 letter that we kind of set them up with. So our borrower is able to go in there as much as they like and run those numbers. And why that's important is because, especially if you consider the market that we're in right now, where inventory is so low, borrowers really, in order to be competitive, they need to be confident and they need to be assertive and they need to know what their numbers are. A borrower that's in any way confused about what their financing is going to look like is not competing in this market. Hence why 40% of people's pre-qualifications are converting to loan applications. A borrower that's confident and assertive and knows what their numbers are, knows what happens if they go up another $2,000 or $4,000 or $10,000. Those are the ones that win bids because they know, they know what their numbers are. They're confident and they're assertive. If our borrower goes in here and says, well, I'm looking at a house for $900,000. Remember, we qualified them up for a payment, up to a payment of $2,800. So this monthly payment now, $5,493, they don't qualify any longer. So the button that was there to issue that pre-qualification letter, it's not there any longer. It's telling them their monthly payment's too high. They would need to get under $2,800 to qualify. Well, what if we switched over to single premium mortgage insurance? Nope, still too high. Monthly payment's $5,000 a month. So, they don't qualify in that scenario. They're not going to be able to issue a pre-qualification letter until they get back within a range that the loan officer qualified them for. This interface is super powerful because it's really dialed into exactly what the borrower needs at this point of their journey. They're looking at houses, they want to put an offer in, they need to know their monthly payment, they need to know how much cash they need to close, and they need an updated pre-qualification letter. All those things that loan officers get calls for, at nights and weekends and inconvenient time, we're answering those questions here. And we're not trying to do too much. We're just really trying to give them the basics of what they need. I will say that these interfaces can be pretty heavily customized. So in terms of data elements that you want to expose to your borrower, we're able to kind of dial those things in. Maybe you want to show a rate, maybe you don't want to show a rate, that type of thing. But again, keeping it super simple for the borrower to give them the information that they need in order to be that, confident, assertive home buyer. So I'm going to stop sharing my phone for a second. Stop mirroring. Here we go.
I do have a quick question for you, Pat.
Sure.
So Steve asked, do you have options for a pre-approval letter versus the pre-qualification? And I did answer in the chat, but I'd love for you to kind of just cover that too.
Yeah, 100%. So look, we know everybody's got a different setup. There's some lenders that do pre-quals and pre-approvals. There's some that do one or the other, or maybe they only do pre-approvals. There's some that do pre-quals, and there's some that do credit underwritten pre-approvals. We can cover all that. I'm in a demo version here, so I don't kind of have every single bell and whistle established. But if I go to this, me setting up this pre-qual for this particular borrower, in this demo version, I had the option to label it as a pre-qualification or pre-approval, and that's what's going to drive all the language. We may have and we do have plenty of clients that say, well, my loan officers are able to issue pre-qualifications, but in order for it to be a pre-approval, the underwriter has to review the file and take some action within Encompass, let's say. That's totally fine. We can tie into that action into Encompass, so that pre-approval then is only exposed when that action has been taken within Encompass. And I'll say the same thing. We take it a few steps beyond that. Also, you'll run into situations where some lenders have these, cash guarantees or closing guarantees, where you can tack those on as well in that situation. So we wouldn't be any good at what we did if we didn't kind of support all those things, because that's what you're seeing in the market from lenders today. So yeah, we support all that. You good, Emmy?
Yeah, that was great. Thank you.
Okay. So what I'll do is I've issued this pre-qualification to this borrower. I texted out to the borrower. The borrower's running some numbers. They're out there on the street. If I go in and I hit this view details button, I can log in at any time and see everything that's going on with this borrower. Okay, so think about that. If I qualify a borrower today, and I say, yep, you're qualified, $300,000, here's your letter. I have no idea what that borrower is doing. Are they active? Are they inactive? Do they have questions? I'm really relying on that borrower to reach back out to me in order to continue that conversation. Or I'm waiting to, reach out to that realtor and kind of ask them, hey, what's going on with Patrick Purchaser? Are they looking or what? This flips the script on that, okay? Because now I can log in here and I can see, 10 minutes ago, we created this pre-qual for this borrower. 9 minutes ago, we shared it via text message to the borrower. I clicked the button twice, so that's there twice. 8 minutes ago, the borrower logged in from their smartphone. So that was just me logging in from my iPhone. The borrower updated the sale price to $250,000. The borrower updated the sale price to $272,000 and $7,423 in taxes. If I want to see a copy of the letter that the borrower issued, I can click that. That's going to give me a copy of the PDF of the letter that borrower issued. And all that activity in real time was being updated back to the loan officer. So if it's Saturday afternoon and I'm out on the golf course, I don't have to be present for that borrower to, kind of be running the numbers for them and, generating pre-qualification letters for them. I would have been notified that was happening. So I would have been notified in real time. Hey, Patrick Purchaser just generated a letter for $272,000. Property taxes $7,423. That's an awful specific number. That probably tells me that borrower might be in the midst of putting in an offer. And to have that degree of insight into what my pre-approved population of borrowers are doing is what contributes to that kind of insanely high conversion rate. Because instead of, again, relying on my borrowers to come back to me, I'm able to kind of see what's going on. I know who's active, and I know when to reach out at the right times because I have this level of insight as to what's going on. And how that works is because I've created something of value for that borrower. I'm giving them the answers that they need at that particular part of the journey. I won't go into all of the bells and whistles that are here for a loan officer. There's a lot. The system is robust. I mean, there's expiration dates built in. So the loan officers are getting notified, hey, this borrower's pre-qualification is going to expire in 7 days. So it keeps my loan officers on top of their pre-approved pipeline. I mean, I was a loan officer for 15 years. You write a pre-qual letter and you send it out. You're not monitoring when the pre-qual is expiring and then reaching out to that borrower in 60 or 90 days. Hey, your pre-qual is going to expire. You wait for them to call you back when they go to put in an offer and the pre-quals, they need an updated pre-qual. And yet, I guess you hope that they do come back and the realtor doesn't say, hey, that's expired. Let's get you in front of the guy up the hall here. He'll get you, an updated pre-qual in 5 minutes. So that level of kind of stickiness with our borrowers and keeping our loan officers engaged throughout the entire process, that's really where the magic happens. The idea that technology is somehow going to drive a wedge between the borrower and the loan officer is just that has not played out. That just does not play out. Borrowers are hungry for this type of technology, but they want to be enabled by that human loan officer. We're certainly not trying to replace that loan officer, take them out of the equation at all. It's just enabling that loan officer to really kind of provide that, that technology bridge between them and the borrower. And that's really kind of why it works. I'm going to go back to my presentation here. Keynote. Let's see here. And just kind of talk about some numbers. So we kind of ran through, that demo and what it looks like. Borrowers on average, when they're issued a pre-qualification letter this way, on average log in 22 times. Across our entire platform, that's what we see. When a loan officer sends a borrower a pre-qualification through QuickQual, on average, they log in 22 times. Now, what do they log into on a piece of paper? 0. You're just kind of hoping they come back to you. But on average, our borrowers are logging in 22 times. That's really high engagement. Sometimes we hear lenders say, well, we have an app or we have loan calculators on our website. The borrowers aren't going to that 22 times. And the reason why they're not is because they're overly broad. Giving a borrower the very specific information they need for where they're at that particular part of the journey is really the key as to why we get that level of borrower engagement. On average, real estate agents generate 4 pre-qualification letters through QuickQual for a borrower. So in there issuing those pre-qualifications, you're solving a huge problem for your agent. You're solving a huge problem for your real estate agent because, they're in the market as well. They don't want to have to slow down getting in an offer. They know time kills deals. Being able to put this type of technology in front of, not only in front of your borrower, but in front of your agent so that agent's able to issue pre-qual letters as well, gives that agent a huge advantage. And that's what we see on average. An agent logs in and issues 4 pre-qualification letters. got a stat here that it takes about 2 minutes for a loan officer to create a QuickQual. I would say that's probably on the longer side, depending on the complexity of the QuickQual. I mean, a lot of loan officers might say, well, it takes me about 30 seconds. If you're setting up something a little bit more complicated with multiple scenarios, maybe it's 2 minutes. I'll tell you, it's less time than it takes to generate a PDF pre-qualification letter or closing cost summary and then send it out to those folks. So it's lightning quick, integrated with the loan origination system, for exactly focusing on that specific part of what the borrower needs at that point in time. And this final stat, this is the one that we're most proud of. And I don't want to say it surprises me, but it never fails to kind of resonate with me how much this means in terms of volume to our loan officers and volume to the lenders that we do business with. 60% of the pre-qualifications that are issued using QuickQual turn into loan applications. And because we have these integrations with the loan origination systems, we can see that. We can see when a particular file moves from a pre-qualified stage, into an application. We can measure those. And that's what we find. You find some loan officers that are doing 85% of their pre-qualifications are turning into loan applications. So I'm just going to zip back real quick to kind of where I was at the beginning of the presentation here. This 60% number on the right-hand side of my screen, that's an accurate number. We can go into a lender and see them dramatically improve the number of pre-qualifications that they're driving to loan application from those numbers, from say a 40% to a 60%. We see that consistently for all those reasons. We're keeping the borrower engaged. We're keeping the loan officer in front of the borrower throughout the entire process. Loan officers aware of expiration dates, of logins. The realtors are engaged. They're less apt to try and steer that business elsewhere because now they have this tool of value that they're able to kind of share with the borrower when the point in time comes. So, so we consistently see that across all of our customers, that 60% conversion rate. So as we talk about, okay, the market that we're going into, how do we thrive? How do we, when I was a loan officer, it was always like, go talk to more realtors, get more leads. Sure, maybe that works. But the easier lever to pull is on these conversion percentages on this screen here. How do we implement technology to do that? And again, there's different aspects of the funnel that you can look at as well. We focused here today on pre-qualifications to applications, but there's other things to focus on as well. Again, we see the most value in trying to solve that problem because you can see how dramatically it can increase, a loan officer's commission, a loan officer's annual volume, and then the overall volume for that particular lender when they change the way that they do business at this very critical part of the transaction, which is that pre-qualified phase. So I'm just going to buzz to the end of my presentation, but I'm pretty sure my slides were up 60%. Yeah, so if you'd like to see, I know I kind of breezed through a demo pretty quickly. A lot of times in terms of how we answer some of those questions when it comes time for pre-qual versus pre-approval, and what do you do about seller concessions, and how do you deal with multiple PMI factors as the LTV changes, and what about down payment assistance loans? We cover it. I mean, we've got I don't even know, tens of thousands of pre-quals being issued every day. So in order to kind of serve those numbers, like we have to have all those bells and whistles baked in. So, if you'd like to see a demo kind of specific to maybe how you do business, scan the QR code, send us an email, whatever you'd like. And we'd be happy to, to kind of do an individual demo where you can kind of get some of those questions answered. Emmy, what do you think? Like anything you wanted me to cover that I didn't cover?
No, I think you kind of hit the nail on the head, and just a great high level look at the product at large scale. And like he said, if you have questions or want to see a deeper dive, by all means, schedule the demo. You can also visit our learning center. I don't have that link up here, but I will drop it in the chat for you guys. We've got some webinars you can watch that we've previously done, some articles that you can check out. But yeah, no, I think you killed it.
All right, appreciate it. I guess I'll close just by saying we're loan officers. I mean, we've built this technology around how a loan officer does business. We've built the technology around how loan officers want to interact with their borrowers and how loan officers want to interact with the realtors. We understand those relationships, and we've built the software accordingly. So, you know, I hope you see that kind of woven throughout the things that we talk about, that, you know, we kind of try to differentiate ourselves from that perspective, that we're really big on user experience, really big on solving the problems for loan officers, and really kind of trying to put the technology in their hands that they want to use because it's making their life easier. So appreciate you guys sticking around. If there's any questions, feel free to fire us an email. We're pretty easy to find. Again, if you want to see kind of a personal demo, we're happy to do that as well. So thanks for joining us, and hope to see you guys around soon.
Thanks, everyone.